Hi everyone, as I'm waiting for more participants to join in the next 5 minutes. Thank you. Hi everyone. Hi, hello. I'm getting your attention. Perfect. Everyone's cozy, comfortable. Okay, fine. Good afternoon, everyone, and from my team, on behalf of my team, I would like to extend a very warm welcome to all of you. Thank you so much for your valuable time, and it truly, truly means a lot. In 2015, Samco Ventures Private Limited was incorporated and founded by Mr. Jimit Modi, also the CEO of the company. They acquired Samruddhi Stockbrokers Limited and rebranded it to Samco Securities. In fact, we were the very first ones to enter into sophisticated financial technology, let me put it in this way. And that paved a way for the retail investors to create wealth, and that too at a lower cost. And since then, it has been our mission for our retail investors to pave a way for them to create a wealth in a way wherein we have built a lot of investment facilities. For example, we came up with our erstwhile stock note trading platform. There was stock basket platform. Later, there was Kya Trade trading platform. So, right now, today as well, we are here, all of us, to understand the behavior of stock market investors. And for that, my company has worked on this research report by Nielsen's, which was commissioned by us. Now, what this research report is all about, why are we doing this, what is it about, why is it, every question which is popping up in your mind right now will be truly answered. And for that mission on the deck, today we have Mr. Yagnesh Kansara, the head of corporate communication, Mr. Nilesh Sharma, the ED and president, Mr. Pratik Adani, Chief Technology Officer and co-founder, Ms. Yesha Shah, the product head, and of course not forgetting the epicenter of Samco Security, the founder, the CEO, Mr. Jimit Modi. So I request Mr. Yagnesh Kansara to please take over. Thank you.
Thank you. Good morning, ladies and gentlemen. Thank you, Janvi, for the introduction. Though Janvi may have introduced me, let me introduce myself to you. I have been a journalist and I have been on the other side of the dais for almost 3 decades. Now, this is for the first time in my life that I am on this side of the dais. Coming back to today's agenda about investors' behavior, I have a very interesting trivia about Indian stock market, and I want you all to participate in this. Let me begin with asking you some simple questions, and I would request all of you to participate in it, and we'll seek answers from all of you who are present here. So, let's begin with simpler questions. How many demat accounts India have? Any idea? Around 11 crore, correct? How many of them are active? Half of it, correct. So these are all beginners' question. Now let's come to some complex one. How many of you invest in stock market directly or indirectly? Can you raise hands? Okay, good. So if you invest indirectly in stock market, say through mutual funds, how many of you know how much return your fund manager is earning on the capital which you have employed? Any idea? Any idea? Yes. How much? 20%. Okay, good. If you are taking a direct exposure in the equity market, then do you know how much money or how much return you have made, say over a period of last 1 month, 3 months, 6 months? Can any investor calculate about that? What is the rate of return? This is a bit hard answer to crack. So basically, people invest in different asset classes depending on the risk appetite, which give different rate of return to the investors. For example, if you invest in a bank fixed deposit, you earn a rate of interest of around 8%. So your rate of return on the amount you have invested is around 8%. Similarly, the rate of return differed from different asset classes for a variety of reasons. Out of this, majority of investors prefer stock market or equities as an asset class because they feel that this is the vehicle which gives more faster return on money invested as compared to other asset classes. But do they know how much they make? This is a very difficult question to answer. Not only this is a very serious issue, and no one talks about it, and no one wants to talk about it. However, to talk more on this and reveal the findings of Samco Commission and Nielsen conducted survey on Indian capital markets and investor behavior, I would invite our President and Executive Director, Mr. Nilesh Sharma, on the stage. Thank you.
Hello. So, good morning, everyone. As Yagnesh bhai rightly put, hi, I am Nilesh Sharma. I am EDN President at Samco. अब बात performance की होगी. So let's start with the media's performance. Obviously, we're not going to judge media on the stock market performance, but we have to judge on the basis of how many accounts, demat accounts, what awareness you have done. And I believe media has done a very phenomenal job in a country where people get confused between a Silicon Valley bank and a Shamrao Vittal bank. Media has done a lot for awareness of the capital markets. And on behalf of the whole capital market fraternity, I'd like to say thank you. Seldom people say that the capital markets have increased because of Geo, because of stock market, because of Sensex and so on. But media has played an extremely important role. But we have seen that it's a thankless job. So that's why we are here to thank you first on your performance. I believe your performance have been phenomenal in spreading awareness and reach in the stock market. As Yagnesh bhai said, we have reached more than 10.8 crore, and obviously this is December 22 data. Right now it would be over 11 crores. I believe the only restraining factor here would be the number of PAN holders in India. If SEBI allows people to invest without PAN, I believe we would be at par with crypto, where 8, 9, 10 crore more people are investing. Now, this is about the media. Let's have a look at the retail participants are there in the market, but are they performing? Are they actually earning from the market? Let's see. Let's focus on the key problems of the retail investors. Now, we have seen 11 crore demat accounts have been opened, but what is the purpose of opening the demat accounts? The basic purpose of investing, obviously, would be to earn a return on capital. Now, it's a very standard factor. Obviously, if you're putting in your money, your hard time, you will obviously want a return on your capital. Let's see what the expectations are and how the retail investors have been performing. But before that, let's see, return on capital is important, but what's the amount of return that we're looking at? What's the percentage return that we're looking at? Let's say daily for roughly 3 hours, people put their time in the market, watching the stock prices. Even in the evening, they are more concerned about SGX Nifty or what the Dow is doing. And obviously the banks, the way it's collapsing, first SVB, then Signature, then yesterday Credit Suisse. Thankfully, no Indian banks yet. But you're putting in hard time in the market without but obviously you're putting in hard time in the market without any expectations. Obviously, no. You're putting it because you're expecting some kind of return. Let's say you put in 3 hours daily and you get a return of only 4%. Would you be happy with that return? Obviously, no. Because obviously you would have put that money in the FD, 7.5. I believe someone has given 8% also in the recent months. So what is the use of putting 3 hours daily, putting in efforts, putting in risk, taking extra risk, but not earning even FD beating returns? So obviously 4% is not the return. Return on capital is not what we're looking at. We are looking at adequate return on capital. That obviously if you're putting in time, effort, risk, you should get adequate return. 4% is not the adequate return that you should be aiming at. Then if not 4%, then what's the number? What's the investor's expectation? Let's have some number here. How much do we expect? Let's say any random person. 20%? Do you believe 20% is a good return? I can see a lot many nodding people. Sorry? 10%, obviously yes, but the FDs are now competing 8%, 7.5%, 8%. So you should get more return on your risk. So let's say 20%. I believe a lot many people are agreeing that 20% is a decent return. But some can also feel 40%. The next gen YOLO crowd, they believe 60, 80, 100, 3x, 5x, and so on are the returns that people are expecting, right? But let's say if you choose 20% and you get 20%, phenomenal. But then you go back and see that the Nifty has given you 40, 50% return and you're going to be disappointed. You would have thought that, okay, I would just invest in Nifty and 40, 50% return you would have easily got, which has happened post 2020, where in the first year market doubled and then 18, 20% return Nifty has been giving. Now, let's say you met 40% or 60%, 80%. But the problem here is, looking at Nifty in the last couple of years, 40, 60% may look easy. Does anybody know what's the CAGR of Warren Buffett? 20%, right? So if you are expecting 40% return from the market, you are aiming to beat Warren Buffett and aiming to be the richest investor in the world, which I believe is an extremely difficult task. So that's why the point is, returns are not relative. If you aim 20% and you see index performing 50%, you'll be disappointed. You'll be trying to aim 40% and you'll be beating Warren Buffett, which is also an impossible task, right? So what is the actual returns that people should expect? The answer is, there is no number which you can look at in isolation. It is always a relative number. Now, but these are just expectations. These are just khayali pulaf. Expectation mein to I want to 3x my capital in the next 3-4 days. I look at Adani. I say that if I had shorted on day one, I would have won 80%. The next day, if I would have been long on it, I would have doubled my money in a day. But obviously, market doesn't function like that. Khayali pulaf mein to sab chalta hai. Let's look at reality. Now, the reality, okay, so we saw that many people 11 crore demat accounts have been opened. People are trying to get a pie out of it. People are trying to get returns out of it. Unfortunately, the reality is completely opposite. So SEBI did a survey and they found out that 90% retail traders, 9 out of 10. So if you have 50 people here, only 5 people are going to earn money in the FNO segment in the last financial year. So this is an eye-opener that just by participating, you're not going to win. Just by being a part of, just by opening demat accounts, you're not going to earn a return. You have to do something extra, correct? But this report also has a fundamental flaw. It only looks at one segment of the whole capital market. And as you would have been taught in the textbooks, derivatives are not trading tools, they are hedging tools. And let's say if there are some people out there who have actually used derivative for hedging, maybe there can be a scenario where they have earned a loss, where they've got a loss in derivatives, but in equity market, they would have been getting better results. Now, to understand, and also this is because one segment for 1 year, to understand the reality or, okay, was the FY22 a blip in the market because the markets have not been performing, we went ahead and we tried to get a picture of the whole capital market in India. And that's why we conducted the Nielsen report. We commissioned Nielsen to do a survey and find out what the actual scenario is in the retail stock market in India. We went out, there were around 2,000 respondents. The age group was 25 to 45, which is the ideal stock market retailer scenario. And we went to 10 top cities where the retailers and investors in India are. And let's look at the findings of the report. Believe me, it is startling. First finding is 65% of the investors are not even aware of their stock market returns. Even when you play gully cricket, you keep score, there is person counting the score. But in stock market where actual live money is involved, people do not know. If I ask someone here what is the exact return in the 3 months, I believe many of us would not, even I do not track it on a daily basis or a monthly basis or a quarterly basis. So people would not be aware what they are earning. It is extremely difficult. Even when you take money out of an ATM, you count it twice. Correct? Where the matter of thousands. But here people are investing lakhs and crores of rupees, but they do not keep a tab. It's like they're going out in the casino. It's not a business, it's a hobby. It's a casino where people go out. Let's put the chips down blindly, then see that, let's hope that God is graceful today and we earn a return. They don't even count the money they earn. It's only after the year ends, they have to file the income tax returns. Their CA comes and tells them that itna loss hai, itna profit hai, and so on. Next is 60% investors do not even have a target. It's like उनको पता ही नहीं है क्या करना है क्या नहीं करना है, पैसा डाल दिया भगवान भरोसे. They don't have a target. They don't know that if they are putting 1 lakh, should they aim for 20%, 40%, 60%? They don't have a target. It's like India and Australia is playing a test match. 2 innings India will bat, 2 innings Australia will bat, and after that they will decide that what's the total score and see if you have won or lost. So first, people do not know what they are earning. People come to the markets for gambling, for casino, because they don't have an expectation. They just come and they hope that they get lucky with their money, which is extremely risky. Third is people do not beat the index also. It is very easy to earn return out of index. You just have to buy a Nifty Bs. People are not even able to beat that. Forget FD. This is also a very simple task where you can just buy a Nifty Bs, but people are not doing that as well. The worst part is people do not know. They do not even know that they have to beat the index. They just know that, okay, they have to put their money, expect some returns and go home. But this is very risky. 11 crore people are coming to the market. 11 crore people are there in the market in actuality, but they are not earning money. It's more of a slaughter market where people come, they get slaughtered, they pay the money to the market and they go back. So but it's stock market. So what we understood with all this is, first, trading is easy. It's very easy to open a trading account. 5 minutes, instant trading account you can open. But earning profit is extremely difficult. It has been come out in the SEBI report, in our internal survey as well. And also with the Nielsen survey says the same thing. Trading is easy, earning profit is not. Trading is low cost. 20 rupees brokerage, free brokerage, etc., etc., etc. But trading losses are very costly. You may save some money on brokerage, but you are obviously going to pay to the market. That's what the findings are. So that is why, and the 11 crore people in the trade, in the demat accounts that have been opened in the stock market, they are just participants. However, the real performance is earning profit, which is not the case. Please understand, you can have risk-free returns in FD. You can get an index return via liquid Ds. Here, you're putting in 3 to 4, 5, 6 hours daily. It's like you're working in a company for the one whole month. At the end of the month, as we saw earlier, that the expectation from the stock market is to earn a return on capital. Similarly, when you work somewhere, you expect a salary. But the scenario here shows that you worked for 1 month, but instead of getting the salary, you're paying to the company. That, okay, I've worked 1 month, instead of getting something, I'm paying something. Similarly, it's happening in the stock market as well, where instead of getting a return, people get their hard-earned money, they save the money, they trade and invest in the markets, but instead of earning something, they're losing it. So, in fact, instead of earning a return on capital, the return of capital looks difficult. However, as Yagnesh Bhai rightly said, no one in the industry is looking at this problem. Everyone is focused on making trading easier, getting more people in the stock market. But getting more people is just the first step. After getting in, even if they are not earning money, what's the point of getting them in the first place? This problem we are trying to focus, and I invite Mr. Jimit Modi, who is the CEO and founder of Samco, to see how we can solve this problem. Thank you.
Thank you so much, Nilesh, for sharing the findings. And I think the most startling fact is the fact that if you see, 2 out of every 3 people, 2/3 of the people who are in the market don't even know how much they make. See, the fundamental attribute and the fundamental reason why everybody comes to the market is to earn a return. And in India, we are actually a very, very return sensitive, cost sensitive country. Everybody wants to count everything. You know, the first time you go out and buy a car, kitta deti hai? You'll go to an FD, you will say kitta return milega. In other instruments, you'll say okay, kitta milega. But when it comes to your own trading account as a whole, most people don't even know how much they make. And even if there are some limited people who know, most of them, about 2/3 of them, are not even able to make a certain reasonable rate of return. This is quite a startling fact. And while Nilesh actually touched upon, the SEBI report that recently was conducted on F&O trading, and that spoke about just the F&O segment, and it didn't talk about, but nobody just trades F&O, right? I mean, everybody looks at a trading account on an aggregate basis. Who says just मैं खाली F&O trading करूँगा और cash में मेरा trade zero रहेगा? You have to look at things on an aggregate basis. You have to see, boss, cash, FO, futures, options, currencies. How am I doing on an aggregate basis? Because my return on capital is coming from what I'm doing on my entire account. And while the SEBI report suggested that 89% lost money, there is one very, very important aspect that and a lot was written about this actually. The media wrote a lot about this report. It actually went viral of sorts. But very few people have actually identified that this report ignored a very, very important aspect. It completely ignored the aspect of what was the capital deployed to earn or in the F&O segment by the retail investor. They've done an analysis that 89% lost money, 10% made money, so much was the total average loss, so much was the average profit. But how much was actually deployed to earn that profit is that the report is completely silent about it. This means to say that when you're looking at only one absolute number without the lens of relativity of how much was actually put in, you actually can never get the right picture. Let me give you an example. This was the summary statistics that they published. They said, okay, the average profit made by the profit makers was 8,000 bucks. It was in FY19 and 3,000 rupees in FY22. And about 9% made money in 19 and 6% made money in 22. But how much was put in to be able to make this 8,000? Nobody knows. Now, let me put you through an interesting other factor. I mean, Nilesh spoke a little bit about the Nifty returns. Let me ask you another question. For FY19, which was the period of the SEBI study, what was the return of the Nifty? Does anybody know? For FY19, that is from 1st April 2018 to 19, what was the return? In that year, the Nifty returned 14.93%. So in the year FY19, the Nifty returned 14.93%. And the second year that the report took into consideration was FY22. And in FY22, the return was actually higher. It was higher at 18.88%. Now, where am I getting to? Look at this. I mean, this is an aspect that nobody has spoken about. From FY19, you've seen that the average profit has gone down from 8,300 to 3,065. But the actual Nifty return in both these years, the FY22 return was actually a lot higher. So instead of profits going up in a year where the markets was trending and going up, people's profits have actually gone down. This has been an aspect that has been completely ignored and missed. Only looking at it from the absolute lens of the average profit and not looking at it relative to what the indices have done is a grave mistake. And let's look at it. We said, okay, if we want to understand what was the average capital deployed and what was the return that people made, while obviously there is no standard number for that, neither has SEBI spoken about it, neither it is well reported. So we said, okay, let's take one minimum threshold. See, the bare minimum threshold for entering and trading in the F&O segment is how much money or capital you need to trade one lot of the Nifty. Now in FY19, the amount of money required to trade one lot of the Nifty was 98,000. And for the same number for FY22 was 1,44,000, obviously because the Nifty absolute level was a lot higher. Now if you were to see the average profit made on this 98,000 rupees, that is only an 8.5% return, which against the 14.93% is a 6.4% underperformance, which means what? That even if you simply would have put your money, as Nilesh suggested, in a Nifty ETF or a Nifty index fund on the 1st of the year and sold on the 31st of March, you would have still got 14,600 bucks. But the average trader here has got only about 8,000 rupees. So there is a massive loss that is caused by the underperformance. The situation in FY22 is even worse. The average return on capital employed is only approximately 2.3%, whereas the Nifty was 18%. This is a 16% underperformance for the retail category investors. the simple profit of a retail of an index ETF would have been 27,000 rupees, vis-a-vis the 3,000 rupees that people have actually made. Now this is 24,000 rupees that people have left on the table by indulging in trading in their own accounts. Now SEBI said 9% of the people in FY19 were profitable. For FY22, 6% were profitable. But as I just showed you, even those who are profitable, by and large, most of them were actually underperforming because their relative performance to the Nifty was a lot worse. You know, they were earning about 7%, 8% or 2-3% vis-a-vis the Nifty, which returned 14 and 18% on a year-on-year basis. If you take not the number of people who would have been actually outperforming from this subset of 9%, I think you would find that the number of people who are profitable and doing better than the Nifty would probably be an absolute rarity. You know, it's going to be a rare case to find a situation where an investor or a trader has done both, made money as well as outperformed the indices. And while we looked at the Nielsen data said 67% people underperform, 65% people don't even know how much they make, and we have certain city trends as well that we'll share with you all in due course. But we also went back and did this study internally on our own data, and for calendar year 22, we just looked at one quarter's data, which was Q4, which was from 1st October. 68% of the traders underperformed, which was pretty much in line with the Nielsen report, and only 32% were actually able to beat the performance of the benchmark indices. So in Q4, the Nifty had a return of 7.75%, where the median return of all investors was 4.8%, which meant that there was an underperformance of 3%. Now, if you take the capital employed into consideration, this 3% underperformance has cost investors only on our Samco platform by 120 crores. Now, you look at, if I was to do a quick recap, you look at the total retail category and segment today, over 10 lakh crores plus, I think probably slightly more than that, but I'm saying for the sake of calculation, about 10 lakh crore rupees has been invested by retails held either in the form of cash with their brokers or in terms of stocks or in terms of securities, etc. And out of that 10 lakh crores, our estimate is that there is an average 4 or 5% annual underperformance that comes in for retail investors. Now that means that retail investors are leaving close to 40 to 50,000 crores on the table each and every year by not looking at better alternatives. I think let's put it as simple as that. And as I said, for most people don't even know what their returns are. Most people lose money, and even those who make money underperform the benchmarks. The fact is, as I said, underperformance is an extremely costly affair, and most people don't even have clarity on the basic goal or expectations of the market. So we just saw 77% people, that means 4 out of every 5 people don't even know that if they're coming to the markets, they should have the basic objective of trying to outperform the indices, because that's an easy alternative available. We also looked at data, this is very widely published globally. It's not done from an Indian context. But if you look at, this is published by the JP Morgan company in the US. For the average investor over 20 years has annually underperformed the S&P 500 also by about 4.5%. Now, if you look at this happening in India, as I said, people are leaving close to 40 to 50,000 crores on the table. Every retail investor is losing merely because of his underperformance. Now, why is this happening? This is happening because traders and investors are suffering from a major issue. That is what we call opportunity cost neglect. This issue is defined as a behavioral bias or a behavioral issue called as the opportunity cost neglect. What is opportunity cost neglect? The textbook definition is that you don't know that there are obviously better alternatives available that you could have used to be able to make more money. And let's take the Nielsen report for case in point. 77% people don't even know that obviously Nifty returns could be very easily achieved by putting money in a Nifty index fund or in an ETF. That is a very, very large number, 4 out of every 5 people. And what does that mean? It simply means that they are not fully aware of all the opportunities that are available to them in the market, and therefore cannot make the right decisions. And what we are intending to do, we at Samco want to change this. We intend to change this behavior. I don't want to come back after 20 years showing you the same JP Morgan chart that Indian retail investors also have underperformed again by 4 or 5% over a period of 20 years. We want to change this, when we have this opportunity in India and in India's Amrit Kal. So before I showcase what we are going to talk about, I have a quick video for you all to play. Yeah. Today, I am pleased to announce, the launch of our mission, which we call Mission Ace the Index. What do we mean by Mission Ace the Index? As we spoken a little bit earlier, and Nilesh also said, today any and every investor can make an index return by simply investing in an ETF or an index fund. And an average investor today puts in 2 hours, 3 hours of his day every day. And if he's coming to the market, if he's opening a trading account, he has to compulsorily beat the index. Otherwise, it's a futile exercise. Why is he trading? Why is he even here if he's not able to generate? 13% is the CAGR return that the Nifty has delivered. And if you're not in a position to deliver more than that on your own trading account as a fund manager of your own money, then there is no point of being directly in the markets. And that's why we have the war cry to say, index ace karna, choice nahi zarurat hai. This is an absolute bare minimum that each and every investor has to target on their own trading accounts. Now, what is this Mission Ace the Index? And the Mission Ace the Index is an endeavor, is a campaign, is a mission is a movement to get awareness amongst each and every retail investor that they have to beat the index on their trading accounts. That there are better alternatives available if they are not doing the same. It is to try and create a culture of outperformance. It is to try and educate to people that your trading account, if you have a trading account, you are a fund manager of your own, and you have to make sure that your performance is up to the mark, or you switch to better alternatives. And our objective in phase 1 of this mission, of this entire education, investor awareness and education initiative, is to create awareness about the investors' performance, help them to measure this, and to help them set a benchmark of consistently acing the index. I think that is the bare minimum that we are expecting in phase 1. Obviously, in phase 2, we will want people and we will educate people on how that can be done and what are the specific things and ways that people can do in order to beat the index. But yes, in phase 1, creating awareness about that is a must. Now, and for that, what we are launching today is what we call the Ace the Index Pledge. I think this is very, very important as a phase 1 initiative. We are inviting every investor, every trader today who's participating in the stock market to take a pledge that they will look at one of 3 things. First, they pledge that they will try to ace the index. They will try to consistently outperform and beat the markets over multiple periods of time. And if they are not able to beat the index, if they are not able to ace the index, then they will actually shut their trading accounts and choose one of 2 alternatives. They will outsource their money to either a professional fund manager who will deliver more return for them, or simply invest in an index nifty ETF or an index fund. So it is a pledge that investors have to take themselves, that they are either going to ace or outsource or index. It's the ace outsource index pledge that I'm going to do one of the 3. If I'm not able to ace the index consistently, I'm going to shut my trading account. Now, believe me, it's very, very hard for a broker like us to come and say this. A lot of my team members were saying that, should we really go out and tell people, because our bread and butter depends on telling people to trade more. But this is we said this is the right thing to do from a customer perspective. This is the right thing for the investor fraternity. You can't keep, as Nilesh said, you can't keep investors being slaughtered time and again every year, leaving 40-50,000 crores on the table for more evolved investors. And today we put this pledge live on acetheindex.com. This is a specific pledge that we are asking people to take, that they will prioritize their investment performance and they will either try to outperform or outsource their funds to a fund manager or invest in an index ETF. And we want to make sure that people take this resolution, people take this pledge and honor this in their best interest, right? I mean, at the end of the day, it is every investor's own hard-earned money that he has to make sure that delivers a return. And as I said, we've seen in the Nielsen report that 77% people don't even know that they need to beat the markets. I mean, this is a glaring problem. If you're in the market, you have to make sure that you're beating the market. Otherwise, why are you even here? As I said, the first phase objective is to create awareness, and our call to you, and as Nilesh said and thanked, you guys have been instrumental in creating the awareness of the culture of equity investing. But I think now it's important to move ahead just from the culture of investing to a more culture of an outperformance. And therefore, our call to each one of you is, first, take the pledge yourself. I think a lot of people, you are trading yourselves, you're investing, you're even looking at mutual funds. Take an aggregate view of your accounts, take an aggregate view of how much money you make, measure how much is the actual return that you made on your money, and take your pledge that you will ace, outsource or index. I think that's very important. The second I think is very important and our request to the media out here is educate. All of you all write about personal finance, you'll write about how investors should manage their money. I think creating awareness of the fact that if investors themselves are underperforming, they need to shift to 2 better alternatives. That is either an index fund or a professional money manager. I think creating awareness about this so that people don't continuously suffer from the opportunity cost neglect that we have been talking about. I think enough of first was the fact that people were not aware about equity, but today now that they are, they should not suffer from opportunity cost neglect. And I think you can use your the readership, the reach, and educate them that there are better alternatives out there. As I said, there are 2 better alternatives that investors obviously have. And finally, my call to all of you here is to join the conversation. To join the conversation on the hashtag Mission Ace the Index. We want people to get more aware about this. There are the number of people who are coming into the market continues to keep growing. The number of amount that is invested keeps growing, and the problem of underperformance will keep compounding over a period of time. So we are in early years. If we are able to address this and get people on the right track, we will be able to create a lot more successful investors in the market and not just participants. I think the whole movement is aimed at not just people participating in the stock markets, but also succeeding and if they're not succeeding themselves, then as I said, still having a better outcome for themselves by outsourcing it to a fund manager or an ETF. And our commitment as a part of this mission is fairly simple. We are going to use, over the course of the next few months and years, we are going to conduct a ton of investor awareness programs. We will do events. We are going to do a ton of college roadshows to educate people right from the threshold, right from the point that they enter the markets, that this has to be your first objective. Every investor's first objective in the stock market has to be to outperform the index and to make sure that they are generating a better return. And obviously we will look at partnering with you in due course. We will look at media partnerships to make sure that we are able to educate as many people about this as we possibly can. Now, one more point that I wanted to talk about is that obviously it's a great pledge to have, it's a great resolution to have, that you're going to consistently try and ace the index. But how are you going to honor this? I mean, one of the fundamental reasons why people are not in a position to beat the benchmarks, or why 2/3 don't even know how much their return is, because there is no measurement platform available. How do you exactly measure, taking into consideration your return on capital employed, every inflow, outflow of yours, variety of corporate actions? How do you measure? And unless and until the measurement problem is solved, this is going to be like a New Year resolution. It will be forgotten by the time the hangover is over. By the time 1st of January the day ends, people have forgotten their New Year resolution. So unless and until we make sure that we also provide a solution for people to honor and their commitment, honor their pledge, this could probably end up being a failed cause. And therefore, what we are also offering at Samco, we said, okay, just doing this mission is not going to be enough. We will also have to make sure that we offer a measurement criteria. We also offer a solution for people to be able to honor this. And so I'm very happy to introduce to you today what we call a CRP platform, which is, so I'm happy to introduce the Samco CRP. It is a next-gen capital resource planning platform, which is embedded with a trading platform. And I think the way we look at it, and I think that is the awareness that you need to create, that every trading account, every investor who has a demat account, he is a fund manager himself. He is a businessman in himself. He is a micro SME in himself. He's not just a stock market participant, because he's an enterprise. He set up an enterprise. He wants to make sure that he succeeds, and we at Samco are aspiring to do that for him. We want to treat an investor not just as an investor, but as a micro SME. And we saw that in the 1980s, before 1980s, businesses were all over the place. But ERP systems came on board and they transformed businesses. They transformed how data consolidation happened, how there was better efficiency of resources, both capital as well as physical resources. There was far more grip as far as measurement, understanding, etc. was concerned. And we said, why not, let's do this for our stock market participants as well. Let's help them understand how are they allocating resources, what's working for them, what's not working for them. And that's why we built the Samco CRP, and with the clear intent that what ERPs did to business, CRPs will do to business, to capital stock market businesses and retail investors. And with that, I just want to leave you with final one thought before I call on Yesha, who's our head of product, who will explain to you what this platform is all about. If we want our mission Ace the Index to be successful, if we want to make sure that people actually ace, outsource or index and move to a better outperformance culture themselves, then there is a shift in mindset that's going to be required. I mean, today, most people, as Nilesh said, they come to the stock markets treating stock markets like a hobby. It is a pastime. वो टाइम पास करने के लिए आते हैं, आधा घंटा 1 घंटा आया, मैं किया, टाइम पास किया, घर पे चला गया. Now, but the worst thing about hobbies is that hobbies, actually, they don't pay you. They only cost you. If you have a hobby, it is only going to cost you, it's not going to make you money. Ultimately, it is businesses that make you money, businesses that help you create incomes and wealth, and that mindset shift is required in each and every retail investor. They have to start treating stock markets like a business and not like a hobby. Otherwise, they're going to continuously be slaughtered. With that, I would like to call upon Yesha on stage to quickly talk about what our entire CRP platform is and how it is going to help people honor the ACE outsource, or index pledge. Thank you.
A very good afternoon to everyone. Firstly, I would like to thank Jimit for throwing light on the important aspects of the SEBI report and for laying the foundation of our mission and of our pledge. So, we have already established through the Nielsen survey, through our own data, and through the SEBI report that there are 3 core problems that every stock market participant faces. The first is that majority of them don't even know their exact returns. They don't have any tool available to them that will help them understand and track their exact returns. The second is that most of them don't even know that they need to beat the benchmark that they face from an opportunity cost neglect. And the last is that even from those who know that they need to beat it, they don't know how to beat or ace the index. So we at Samco are committed to solve this problem and offer a solution. And as Jimit has already said, we are very, very happy to launch our next gen capital resource planning platform. And the reason is that it cannot be emphasized enough that we want a shift in mindset. We want people to start treating stock market like a very, very serious business. So what will Samco's CRP platform do? Our platform will have trading and investing at the heart of it. Yes, we will offer obviously very fast and cost-effective trading and investing. Along with that, we will also help people measure, track, and analyze their performance. We will help them allocate their capital very, very effectively so that they can maximize their return potential. We will help them manage their risk so that they can reduce their losses and increase their profits. We will also help them with insights and recommendations that will help them to improvise their strategy, their trading and investing strategy. And ultimately, with all of this, we are going to empower our customers to improve their performance so that they can ultimately ace the index. So the starting point of acing the index, and as Jimit highlighted, the major problem that everybody faces is that they don't know how to measure their performance. There is no tool available. So to address this, I'm extremely pleased to announce that we are launching a feature which is very unique, which is a game changer, and it is the first in India, the first of its kind, and first in category. So here's introducing Personal Index. Personal Index, which is your stock market performance, your true stock market performance at your fingertips. So what exactly is this Personal Index? Personal Index is your personal rate of return that you earn from the stock market. As Jimit has said, right, that it is very, very important to take an aggregate view of your performance and of your portfolio. So our personal index will take into consideration the stock holdings, your mutual fund holdings, your derivative positions, the capital inflows, outflows. It will adjust for corporate actions like bonus, splits, rights, etc. It will also take into consideration all your transaction charges and then calculate your true personal stock market performance. So to give you some more context, right, because ultimately your performance has to beat the index, the benchmark index. So how can you think about your personal index and your benchmark index? In the sport of cricket, if any chasing team has to win, then their current run rate has to be greater than the required run rate, right? So you can think of your personal index as your current run rate and the benchmark index as the required run rate. Ultimately, to win, that is to ace the index, your personal index return has to be greater. That's not the only thing which is important. It is also important that you know which is the correct benchmark index against which you should compare your performance, right? After all, you can't evaluate Jasprit Bumrah or any other bowler's performance by looking at statistics like his strike rate or how well he plays the cover drive, right? Because that will not give you a true evaluation of his performance. So similarly in stock market as well, if you're going to analyze an FNO trader's performance by looking at a benchmark like Nifty, which does not take into consideration leverage, it will give you an inaccurate evaluation of his performance. So we at Samco have analyzed trading and investing patterns and styles of our customers and of all the users to give them a current benchmark that they can compare their performance against. So with personal index, we are trying to solve the first two problems that the stock market participants face. The first being that now personal index will empower everybody to easily measure and track their performance so that they will know what is the exact return, and it will also educate and help them to easily compare their performance against the benchmark. So now let me take you through how our platform makes tracking performance extremely simple. So once you have taken the pledge and you have completed your onboarding on Samco, you will see this personalized dashboard. On this dashboard, the first topmost section that you see is your own index. Now, everybody's index, for the sake of standardization, will start with 100. And accordingly, it will move over 100 or below 100 depending upon the performance of your portfolio. So the first value that you will see is your index value today. अभी सबको आदत है, everybody in the stock market, right? सुबह उठ के वो लोग निफ्टी देखते हैं, सेंसेक्स देखते हैं, to know कि आज मार्केट ऊपर है या नीचे. So this one number will tell you कि आज आपका portfolio ऊपर है या नीचे. That is all you have to know to track your performance today. Again, every investor and trader has a habit of tracking the performance of stocks, of indices using charts, right? So what we have done is to make tracking your performance super intuitive. We've depicted the movements of your personal index, that is of your performance and your portfolio, through line charts so that you can easily compare them against the benchmark that you have chosen. Also, it will tell you whether you are acing the index, whether you are outperforming or underperforming today and by what number. So just with one quick glance, you can get a complete overview of your performance today on our dashboard. Now, to ace the index, just tracking your performance today is not enough. You have to consistently ace it. So in the detailed section, you can check and see your performance over historical multiple time frames. You can track it on a weekly, monthly, quarterly, as well as a half-yearly time frame and compare with the benchmark. If you also want to compare your index with multiple benchmarks, we have a solution for that as well. With just simple clicks, you can add multiple benchmarks and compare your performance against them, again, over multiple time frames. Now, सेंसेक्स या निफ्टी ऊपर है या नीचे वो पता चल गया, बट आप ये भी देखते हो कि what has contributed to that move. So similarly, we have this top mover section in our app, which will tell you what is contributing to the move of your index today. You can check the top gainers and losers of your index and compare it with your benchmark index. So with this, we believe that we are making tracking performance super simple and easy. But personal index also helps us serve another purpose. Now we all are aware, right, that recently there have been instances where people have shared fake M2M screenshots on social media with absurdly high returns, correct? And that had gone viral and there were a lot of talks around it. So to solve this, our personal index will actually act as a verified and audited performance report, which will help you to make accurate decision making. Through our platform, you can very simply, in 3 simple steps, just share your performance and flaunt if you are outperforming your index. So now, as Jimit has already unveiled the pledge goes as ACE or outsource index, right? So what do you do if you're consistently underperforming? So in our app, you can easily find out whether you're consistently underperforming, and we will give you smart recommendations to either invest in ETFs and meet the index. Our app will tell you if you're underperforming consistently and will let you know that there are better alternatives. You can actually go ahead and just invest in index funds or ETFs and earn higher returns than what you are doing right now. The other alternative is that you outsource your money to a professional fund manager who has a better track record of giving higher returns. So on our platform, again, you can compare your index returns with the top and leading mutual fund managers. You can check your performance and compare with them over multiple time frames. And if you are underperforming consistently, you can check which are the mutual fund managers who are actually outperforming you and directly invest in those schemes through our app. So as our mission is that we have to ace the index, and the starting point is knowing your current stock market performance, which we have tried to address with the personal index. So personal index is only the starting point. In the upcoming phases of the CRP, we are actually going to help people to improve their performance and ace the index. So picture to abhi baki hai. Now, I would like to call Mr. Pratik Adani, who is our co-founder and chief technology officer, to take you through the engineering marvels that have gone behind making personal index a reality. Thank you.
Thank you, Yesha. That was a beautiful demo of how easy it is now to track your performance on the Samco NewGen app. Well, we have been talking a lot about performance for the past half an hour or so. It has been the central theme of discussion for today. But we are not the only ones who talk about performance. There is one more organization who all of us know, and that is none other than SEBI, who talks and takes performance very, very seriously. In fact, SEBI has taken such a critical view of the performance that it has mandated all the mutual funds in the country to not only track but also report their performance on a regular basis in the form of an index and an NAV. They have also told them to benchmark it against the corresponding indices. And this is how it looks. As you can see, you have the scheme name, you have the benchmark, and you have the returns of the benchmark as well as. Recently, SEBI also went one step ahead. They have now mandated portfolio managers across the country to also track and report their performance on a regular basis. This is going to come into effect from April 1st. And this is the format that they have asked them to follow. Again, they have told them to benchmark it against their indices, corresponding indices, and show the whole track record. Now, why has SEBI done this? SEBI has done this because they don't want the capital market investors to be in the dark. They want to make sure that the fund managers, the portfolio managers are not taking them for the ride. They can track their performance. They can make sure that they can take the right decisions if the things are not going in their way. But what about the retail investors and traders? What does SEBI have to say about them? Is their performance not important? Well, we at Samco are very much in line with SEBI, and we feel that a retail trader and investor should also have the capability to track and make a correct decision based on his performance. Now, if this is the case, why has it not been done earlier? Why has a retail trader been left out? Is it that complex to compute the real rate of return? Is it that difficult? क्यों नहीं किया गया है ये? And for that, I want to take quick 2 minutes to explain how difficult or how complex it is to calculate a mutual fund NAV. For calculating the true rate of return for mutual funds, there are multiple agencies involved. One of them is the custodian, who takes care of all the market settlements, who takes care of the values of all the securities, who takes care of dividends, interest, and all the corporate actions that are available. Then there is an RTA. RTA takes care of all the transactions related things. It takes care of the it takes care of the subscriptions, it takes care of the redemptions, it takes care of the units. All this goes into a fund accountant. And the fund accountant uses all this data to compute a single point in form of an NAV. Clearly, ये simple तो है ही नहीं. This is so many layers. There are so many things happening here. And not only for mutual funds, in fact, for anybody to calculate the real rate of return and to compute their NAV, they will have to become a custodian, RTA, fund accounting, and do the mark to market as well. Now, one more thing, it is so complex that mutual fund industry pays approximately 500 crores annually as fees to all these custodians, RTAs, and every day. Imagine, it is so complicated that mutual funds end up paying 500 crores. इसमें retail investor का क्या होगा? Neither they have capability in terms of calculations, neither in terms of such high fees. I think nobody is looking after the retail investor. And this is one of the primary reasons why SEBI has not been able to put it for a normal customer. But that is where we at Samco come into picture. We are passionate to take this problem head on. And just like Yesha showed you, we have introduced personal index, personal rate of return at their fingertips. And for the first time, the power will be with the retail trader, that too for free. We are not going to be charging anything. We are going to give this power to the retail investor. They have to just simply open their account and start trading with us, and he will be able to track his performance. There was one more issue that we encountered while building the personal index. There was no ready-made technology available in the market. And that meant that there was a great engineering challenge. In fact, this challenge was far greater because the size of the retail market is much more than the number of mutual fund schemes or the number of portfolio managers. So for example, in mutual fund, probably there are around 1,000 schemes. Okay. In portfolio managers, there would be around 2,000, 3,000. But when you talk about a retail investor, they are in crores. Who will compute so many indexes on a regular basis? It's a mind-blowing engineering challenge. And we at Samco and our engineering team had to go through great lengths in getting this done. And today we are very proud that we have achieved some great benchmarks. And I want to showcase this to give you the complexity of how difficult it was. We are computing 12 crore complex computations daily. What does that mean? That is equivalent to NSE's total trades for a week. We are achieving a throughput of 8 gigabits per second. That is equivalent to 1,000 streaming broadcasts. I mean, this is unheard of. Nobody has ever done this. Not one, not 2,000 streaming broadcasts at a time. That is the amount of throughput that we had to achieve. We did 18 crore data inserts are there. This number itself is mind-blowing. It is equivalent to 1 month of 1 minute data combined across all exchanges, NSE, BSE, MCX, currency, F&O, everything all put together for 1 month. That is the amount of data that we are handling in a daily basis. This is, again, I think fantastic. We are very proud that we were able to do this. There is one more thing. Mutual funds do this end of the day, correct? Their reporting of performance is done end of the day. For PMS also this happens end of the day, or it will happen end of the day. They are not even doing it. But for Samco's personal index, we are not going to be doing it every day. We are going to be doing every minute. I mean, this is astonishing, right? It is for the first time ever. Think about it. The retail customer has the more power than a mutual fund or a portfolio manager, and that too for free. We are empowering them. I think today we are going to be extremely, we are all very excited. We think it is going to be a game changer, and we will love for all of you to experience this. We already have around 70,000 people experiencing this, and they are loving it. We hope to do the same. It is a beautiful synergy between hardware and software, as I said, in the new gen platform. I want you to experience it more. And without further ado, I want to give the stage back to Jimit. He will just summarize everything.
Thank you, Pratik. Thank you. Thank you, Yesha, for taking us through the CRP and what a great engineering challenge it has been. Going back, I said, for success, people are going to have to treat this as a business, and if success has to happen, people have to learn to measure. Measurement is everything, and there was a very old John Doerr saying. He said, "What gets measured gets managed. What gets measured gets improved." I mean, only if you measure your returns, your performance over a consistent period of time, are you going to be in a position to improve it. And that's why the entire CRP platform and the personal index have been built. Now, with that, I mean, as I said, outperformance is such a fundamental attribute that is completely missed. Let me ask you a quick trivia. We all obviously track Warren Buffett. We've been talking about him for a really, really long period of time. Does anybody know when he started as an investor, when he set up, the old original Warren Buffett partnership, what was the objective of the original Warren Buffett partnership? The objective of Warren Buffett when he started the One Buffett partnership in the 1950s was not to earn an absolute return. This is an excerpt from the financial world back in the day. His stated goal was not absolute but relative. He aspired to beat the Dow Jones by 10% every year. He was of the view that he has to achieve 10% relative outperformance on a year-on-year basis as an individual investor, as also as a part of the Buffett partnership. And quite honestly, over the past 50 years, this is what he has achieved. 9%, 9.5% was the S&P 500 return. And over a period of 50 years, he has cumulatively outperformed the S&P 500 by an average of 10% on a year-on-year basis. I mean, there is great merit in saying whatever target you set, that's what you're going to achieve. So if you set it, so I'm very, very happy to share that, as Pratik said, there are about 67,000 people who have already taken the pledge and on our platforms during this beta phase, and they have pledged that they are going to beat the markets, they are going to beat the Nifty by an average of 5.5%. I mean, that is what our people have selected. There are obviously some people who have aspired to beat it by 20, 30, some by 5, but the average person has decided, has pledged that I'm going to beat the Nifty by 5.5% in my trading account, or if I'm not able to do that, then I'm going to pledge and I'm going to shut my trading account and outsource it to a fund manager or an Nifty ETF. And monitoring the progress of this is going to be very important, which is why on acetheindex.com we are going to publish a dashboard that is going to be available for everybody to track. Why? For us to track, for the media to track, you will come to know what is the average outperformance that investors achieve on a daily basis, weekly, 3 month, 6 month, across multiple time frames. How investors are doing, you will get to know, and you will also get a sense of the market as to how retail investors are doing in the market. Only if we are able to track this are we going to be able to truly achieve the objectives of our mission. And finally, I think just one thought that I wanted to leave you with is that retail investors today and retail investors and traders have so many powers, have so many superpowers as compared to a fund manager or an index, right? If you look at them, an index has to be 100% invested at all times. A fund manager also has to stick to his mandate at all times. But a retail investor has this flexibility. He doesn't need to make sure that he's 100% invested at all times. He can take tactical cash calls if required. He can also take leverage if required, depending on the state of the market, depending on the cycles of greed and fear. There is also no bureaucratic committee process for retail investors, right? If you look at the index, the Nifty has generated a 13% compounded return over 20 years, or in fact now nearing 30 years, by having 2 committee meetings every year. They just sit twice a year, in March and in September. So by making 2 changes a year also, in such a bureaucratic process, still they're able to deliver 13%, and the average retail investor cannot outperform. So there is no, and still, so that is a superpower, the fact that retail investors don't have to go through a bureaucratic process. And the third big advantage is that they have an advantage of size and agility. Fund managers, they often end up compromising performance or end up suffering from performance if they achieve sizes that are far beyond manageable levels. But retail investors have no such challenge, right? I mean, even if you have a 5 crore, 10 crore portfolio, you can be fairly agile as far as the size of your account is concerned and try and outperform. Now, despite of all of this, despite of all of these powers that retail investors have, if you're not able to outperform, then what's the point? तुम क्यों आए हो इधर? If you're not able to achieve that minimum basic threshold, then people need to really question the purpose as to why they are here. And therefore, as I said, we reiterate the fact that we want people to get familiar with this ACE the Index mission so that they have awareness that they have the power, the wherewithal to be able to beat the index. And if they are not, then there are 2 better alternatives available in terms of professional fund managers or index ETFs, which they can move to. That's it from us at Samco. Thank you very much. I'd like to call upon Janvi to moderate the Q&A as well.
So before we begin with the Q&A, in 2015, as I said, when Samco Securities came into the picture, my founder Jimit Modi had a dream. Okay, the dream was to be different and to be best of everything he's doing. That dream later transitioned into a mission, and that mission today, which I can proudly say has become a reality through Samco Ace the Index, through hashtag Mission Ace the Index. So thank you all the presenters for such beautiful insights. I'm sure everyone must have gotten some of the other points, and as we resume, there'll be a Q&A round conducted right now. Thank you. So I request all the presenters to kindly come up on the stage.
I can use this one. And I obviously shared media kit with you guys here, which obviously carries the press release, carries the pledge, the text of the pledge verbatim. It also carries the highlights of the Nielsen report and its findings. And obviously, because of the paucity of time, we were able to cover some of it. But there will be certain more detailed cuts and nuances of the report in terms of which city, how investors are performing across multiple cities, across multiple age groups, and we'll obviously share those with you in due course. With that, I mean, if there are any questions there, we'll be happy to take questions. Yes, sir.
There is a mic, yeah.
Thanks. Hi, Vidya here from ET Markets. Just wanted to understand one thing. When you guys were showing a presentation, you did say that a retail investor can also track his performance and compare it with any of the fund managers' performance. And if at any given point in time he feels that he's underperforming, he can always directly invest. So how does this process work through the app? Like, how will he be able to directly invest in any fund manager's fund? How does that process work? Can you just give some?
So I think it's fairly simple. As Isha just showed you, it's the click of a button. you will have, if you can go back to that slide by any chance, if you can pull up the presentation. Can you go to the presentation? I'm just going to quickly try and go to that so that you're able to see that. Yeah, let it come. Yeah. Yesha, you want to take that?
So as you can see, you can compare directly your performance with leading fund managers. And if there's a section, right? Fund managers outperforming you. Can you go to the next slide, Shubham? Yeah.
Yep.
So in this section, you can actually see the fund managers and the schemes which are generating higher returns than you. And there's an invest button given. So when you click on this invest button, we have another platform called as Rank MF, which is a platform through which you can directly invest in mutual funds. So we've integrated that platform with the app. So when you click on this invest, you will be investing in the mutual fund schemes via that platform.
So you're a AMP registered mutual fund distributor. So on the click of a button, you can just invest directly as you can do with the. Thank you.
Yeah. So I mean, if you think you're not doing good enough, you can give your money to Chirag Setalwad or Ankit Pandey or Dinesh Balachandran, or whoever you think is doing a better job at managing money than you are. So yeah.
Thank you.
Thank you. Any other question? We've hit the 1 o'clock mark, so I think we've taken a little bit more time. So if not anywhere, sorry.
Yes, behind.
Please go ahead. It would be nice if you can say your name so that we know who you are.
Hi, this is Shailaja.
Hi, Shailaja.
So I wanted to check if you have a number for when you say beating the benchmark, by what number should an investor beat the benchmark? And in the survey, did beating the benchmark take the priority or beating FD returns take priority?
Okay, so I think first part of the question is that every investor minimum should attempt at 5% over the benchmark. I think that is the bare minimum, because if, as I said, 13% is what the Nifty has cagered, and even if it continues to cager at 11-12%, if you're not generating 16-17% by all the superpowers that you have in terms of staying in cash, flexibility, agility, quicker decision making, then there is no point. I mean, why would you take so much effort and energy if you're not generating at least 5% over? So I think that should be the minimum threshold, and we encourage investors who are taking the pledge to set that as the goal that they want to. As a part of the survey, from the 77% who people didn't even think about trying to beat the benchmark, there were other questions around how many people wanted to just achieve or meet the FD return. And about half of the people were very happy with, we'll give you the exact number, but about 45 to 40 in aggregate were very happy even if they achieved FD return from equities, which is actually quite astonishing, because FD is risk-free return. Taking risk, the fundamental understanding of coming to the market is defeated. That you want to make sure that you are rewarded handsomely for the additional risk, volatility that you take over an FD return. So it's quite unusual, and the stat is about 46 or 47%, where people said that 46-47% are happy just with FD returns as well.
I think I just want to add one more thing. I think this is the mindset that we want to change, right? I mean, we want to stop you guys comparing yourself with FD, and we want you guys to start comparing yourself against an index. So I think that is the overall mission that we are at.
Yeah.
Hi, this is Sanket from ET Wealth.
Thanks.
I have a follow-up to that question. What is the ideal time frame you want investors to look at when they are comparing to the mutual funds or the index, whatever it is?
So, I mean, ideally, our sense is that you should first look at the 1 year time frame. I think 1 year is when you should compare, and it's going to be impossible for somebody to outperform in all periods of time. Every year, people are not going to outperform. But I think looking at it from two lenses. One is the 1 year return, that if you're close to the Nifty return in a 1 year period or outperforming, that's fine. And the second is a 3 year rolling return. I think the fact that if you're underperforming in 1 year, but over a 3 year return, you're still outperforming, that's still fine. You're doing a pretty good, decent job. But over 1 year, you're underperforming, 2 years you're underperforming, 3 years you're underperforming. Across multiple time frames, if you're consistently underperforming, then you're better off putting money either in an index ETF or with a fund manager. So the operative word is the pledge being consistent underperformance, right? That you're consistently underperforming across 3 months, 6 months, 1 year, 2 year, 3 year. And if all of this is bad, and believe me, for 60 to 70% people, they are underperforming in all of these periods. And if they are underperforming in all of these periods, then it doesn't make sense for them to be directly investing in equity at all.
I mean, you can't reach 1 year return profit if you're not beating in consistently across other time frames, right? I mean, if you're consistently bad in each time frame, you're never going to be good at the end of the year. It will be very difficult. But so the idea here is to keep a track. But I think a view of whether you want to shift your money or not should be, like he said, over a period of 1 year or 3 years. Yeah.
And just to add, so currently, because even the beta phase, we had only index data of our customers for 6 months. So as time goes by, we'll be adding their benchmark and their personal index numbers for a year, 3 years, 5 years, and so on. So they can consistently check whether they're underperforming or outperforming.
One of the slides mentioned that you will be showing 1 year, 3 month, 6 month performance. So my concern here is, will investors be tempted to look at this short-term 1 month, 3 month return and then sort of drive themselves to improve on the return, then trade more? Will that sort of provide a negative nudge to them?
So, not really. See, basically, if you see the format of reporting that we followed, it's pretty much the same format that SEBI has prescribed for the PMS managers as well. If you look at the PMS circular that goes into effect from 1st of April, that report has the 1 month, 3 month, 6 month, 1 year, 3 year format. That is the same format that we have followed. And our sense is that we are not creating any innovation on the, just 1 second. 1 second. First I wanted to just show, yeah, 1 second. I want to show, no, 1 second. 1 second. No, I'm just showing first the time periods. Yeah. So if you look at these time periods, right, the 1 month, yeah, you look at the 1 month, 1 week, 3 month, 6 month time periods. This is pretty much in line with how reporting standards and formats are regulatory prescribed across all asset managers. So there is not much that we have done, and I don't think people are going to draw an inference that because I'm underperforming in 1 month I have to trade more, or because I'm outperforming in 3 months I have to trade less, or so on and so forth. I think the idea is that this has got nothing to do with whether you trade or not also. I mean, even if you're just a simple buy and hold investor, this just gives you a track of what your buy and hold investments have done over 3 months or 6 months. Necessarily, there is no requirement for you to trade per se.
And as Pratik rightly said, that your annual returns is going to be a sum of parts of your monthly, quarterly and weekly returns. That was one part. And second thing is, even when we are recommending them to invest in mutual funds or an index fund, it would be only if you're consistently outperforming all the time periods. We are not going to say that, okay, one day you have underperformed or 1 week underperformed, you go and invest in an index fund. That's not the case. So we want to recommend only if there is consistent underperformance.
And that, yeah, so if you see, this is the SEBI format, the 1, 3, 6 month, 1 year. So I think we're pretty much following that format and not reinventing the wheel as far as the format is concerned. Yeah.
Sir, I'm Jaykumar. See, I have a simple doubt.
Yeah.
How you are evaluating the performance of individuals using chatbots or manually?
No, so I mean, there is no chatbot per se, but there is an entire index and NAV computational algorithm, and that algorithm is taking into consideration, as Pratik said earlier, it's taken into consideration the valuation of securities, corporate actions, capital inflows, outflows of accounts, your stock positions, derivative positions. So all of that, all of these input parameters flow into the algorithm, and the algorithm combines typically what custodians, fund accountants, RTAs do for mutual funds or for PMSs now, and the algorithm does that for the retail investor and presents the return in the form of an index number, which obviously gets used to calculate percentage returns as well. So there is no chatbot or say, but yeah, at the end, at the core of that is the index NAV and return computation algorithm.
Then how you will get time to verify all these things within a short period of time? That also absolutely free if you are doing it like that.
So I think the beauty for us is that today, if there is a corporate action, right? Let's say today there was a recent corporate action where a stock got split 4:3. There was Astral. Now, as a common entity, we only have to account for that corporate action once. We have to make sure and we have to understand that Astral में corporate action एक बार हुआ है, 4:3 split हुआ है, and applying that split across lakhs and lakhs of customers or crores and crores of customers is the job of the engine, is the job of the algorithm itself, and that allows us. So we do it manually once at an aggregate level, and that computing power allows us to do this at scale for multiple people. We need to just make sure that we do it first time before it goes into the input as far as the algorithm is concerned, and once that is sorted, then we do that. And usually all of that we end up doing end of the markets or before the opening of the markets the previous day. And I think we've seen over a period of time that we have enough time to do that. I don't think that is, in fact, as I said, we are doing this real time, so it's not much of a challenge.
So this app is available in Play Store or we have
Both.
to download from other?
It is Play Store, iOS Store, web, everything. It's available on all platforms.
So my last question, if a beginner download your app and seeking your advice, see where to invest, how to do it, he has no idea about share market. You have people to assist them or they have to do in their own way?
So, I mean, at this point of time, we obviously have an onboarding and handholding team which will help an investor make sure that they find their first feet when they open the account. You'll receive a call, you'll get help in downloading the app, getting yourself started. But we are not explicitly giving any recommendations. We're not going to say buy this, buy that, sell this, sell that. That's what we are doing. We are saying, okay, if you're interested, we are laying down all the options for you. That these are some of the stocks that you could be looking at. These are the good quality stocks. We are also giving you the option, if you are a beginner and you don't know anything, that then index ETF first is the best option that is available for you. So either you start an SIP in that, or you do a lump sum investment in the Nifty ETF. That's something that we do. And if obviously they need help, they can call our offices. But I think in phase 2, at phase 1, this is where we are. In phase 2, the hand holding will get a lot more deeper. It will get a lot more intuitive. It will get, we'll help people identify what are the right kind of strategies that may work for them, what is the mindset, what is their risk profile, so on and so forth. But we are not there yet. I think that is still going to be happening a few months down the line.
Thank you.
Yeah. Can someone pass for mic too?
हेलो जिमित।
हेलो।
आपने जो नवभारत टाइम्स से सुधा श्रीमाली, ये जो लोगों के हाथ में पर्सनल इंडेक्स का आपने आज लॉन्च किया है, रिटेल इन्वेस्टर के लिहाज से तो मैं इसको अच्छा मानूंगी, क्योंकि जैसा आपका सर्वे है कि उसमें ज़्यादातर लोग 67% इन्वेस्टर मुश्किल से ये जान पाते हैं कि उनका कितना रिटर्न है और वो कैसे उसको आउट परफॉर्म करें इंडेक्स से। तो उनके हाथ में एक आपने टूल दिया है। लेकिन रिटेल इन्वेस्टर को हमेशा पीएमएस तो नहीं, मैं म्यूचुअल फंड की बात करूँगी, तो फंड मैनेजर्स और म्यूचुअल फंड ने ये कहा है कि इन्वेस्टिंग जो है वो लॉन्ग टर्म प्रोसेस है। यहाँ आप 3 से 5 साल तक इन्वेस्ट करो, तब आपको रिटर्न मिल पाएगा जो इंडेक्स को आउट परफॉर्म करेगा। तो ये जो बेसिक है इन्वेस्टमेंट का, जो हम यहाँ माना जाता है, तो क्या इस थॉट को, क्या ये जो प्रोसेस है पर्सनल इंडेक्स का, ये आप इसको कैसा मानते हैं? क्या ये साइकोलॉजिकली इन्वेस्टर, जो रिटेल इन्वेस्टर है, जो हर वक्त अपना ये देख नहीं पाते हैं कि उन्हें म्यूचुअल फंड में कितना रिटर्न मिला है, उन्हें हर वक्त ये एंग्जाइटी रहेगी और वो हमेशा इस म्यूचुअल फंड से उस म्यूचुअल फंड में शिफ्ट करते रहेंगे। अगर उन्होंने पीएमएस लिया है, थोड़ा अच्छा अगर टिकट साइज़ है, तो वहाँ भी उन्हें ये चिंता सताएगी और जो रिकमेंडेशन होगा वो वहाँ शिफ्ट करेंगे। अगर वहाँ कुछ नहीं मिलता है तो कहीं और शिफ्ट करेंगे। तो ये जो रेस है उनकी इन्वेस्टमेंट, उनको रिटर्न बेहतर मिले, तो इसको आप इन्वेस्टमेंट रिटेल इन्वेस्टर्स के लिए कैसा मानते हैं? क्योंकि मुझे लगता है कि वहाँ प्रॉब्लम थी इन्वेस्टर्स को, क्योंकि वो ट्रैक नहीं कर पा रहे थे। जब वो ट्रैक कर पाएंगे तो अलग तरह की प्रॉब्लम्स होगी। तो वो साइकोलॉजिकल जो प्रॉब्लम होगी, जो नीड्स होगी, उन्हें आप कैसे कैटर करेंगे?
ठीक है। सी आई थिंक पहला तो सो फार, जैसे हम इंग्लिश में कहते हैं ना, इग्नोरेंस इज ब्लिस। अब तक आप किसी को कोई सच्चाई पता ही नहीं थी, इसके लिए किसी को प्रॉब्लम था, उसका कोई रिकग्निशन ही नहीं था। सो टू दैट एक्सटेंट नाउ वी आर सॉल्विंग वन पार्ट ऑफ द प्रॉब्लम। वी आर सॉल्विंग द प्रॉब्लम दैट फर्स्ट यू गेट टू नो योर रियलिटी, कि सच्चाई क्या है। 1 मंथ, 3 मंथ, 6 मंथ, 1 ईयर, 3 ईयर, 5 ईयर में आप क्या कर रहे हो, वो आप जान पाओ अपने पर्सनल इंडेक्स के बारे। एंड आई थिंक द सेकेंड फैक्टर इज दैट इफ यू हैव एंग्जाइटी ऑल द टाइम दैट क्या मैं अच्छा कर रहा हूँ या बुरा कर रहा हूँ, क्या मैं 3 मंथ में, 6 मंथ में, देन फर्स्ट ऑफ ऑल डायरेक्ट इक्विटी इन्वेस्टिंग तो इज नॉट फॉर यू, बिकॉज if you are not able to understand that this is going to be a journey over a period of time, and for you to be able to make sure that आप ट्रेडिंग अकाउंट में परफॉर्मेंस जनरेट कर पा रहे हो नहीं, और उसके ही आपको बेसिक एंग्जाइटी हो रही है।
लेकिन आपने इसमें म्यूचुअल फंड के प्रोडक्ट भी हैं।
हाँ।
सिर्फ स्टॉक मार्केट की रिपोर्टिंग टाइम बहुत कम रिटेल इन्वेस्टर ट्रैक करते हैं, लेकिन यहाँ वो कर पाएंगे एवरी मिनट या एवरी डे। तो ये एक अलग बात है। तो इसको मुझे आप बताइए, क्योंकि स्टॉक मार्केट के लिए मैं समझ सकती हूँ, लेकिन इसके अंदर दूसरे प्रोडक्ट भी हैं।
इसमें ऐसा है मैडम, आप ये कह रहे हो कि लोगों को पहले पता ही नहीं था तो अच्छा था। ये तो ऐसा हो गया कि मुझे कोई बीमारी है, मैंने ब्लड टेस्ट नहीं लिया तो अच्छा होता, बिकॉज ब्लड टेस्ट में मुझे पता चला कि अच्छा ये बीमारी है। तो मैं उसकी तैयारी करूँ या मैं कुछ और कर सकता हूँ. एंड ट्रैकिंग करना बहुत ज़रूरी है. सी आप समझिए, पहले लोग अगर हेल्थ में भी काफ़ी इंप्रूवमेंट आ चुका है. पहले लोग मंथली टेस्ट करते थे या ईयरली टेस्ट करते थे. अब आपको घड़ी में मिलता है कि आपका कितना हार्ट रेट चल रहा है, आपने कितना वॉक किया है डे में, एंड कितना आपका डायबिटीज़ है या शुगर है, एंड सो ऑन एंड सो फोर्थ. तो ट्रैकिंग हेल्प्स यू. आप उस पर एक्शन ले सकते हो. अब क्या था, आपको पता ही नहीं था क्या हो रहा है, तो आप कोई एक्शन नहीं ले रहे थे ये सोच के कि सब ठीक है. वो जो ऑल इज वेल का स्टोरी है कि अज्यूमिंग कि सब ठीक है, वो वैसे चल रहे हैं. बट ट्रैकिंग से आपको पता चले कि एक्चुअल क्या हो रहा है, एंड आप रेक्टिफाई करने के लिए आप स्टेप ले सकते हो. नहीं तो आप लॉस करते जाओगे, करते हो 10 साल बाद आपको पता चलेगा अरे मैंने 10 लाख इन्वेस्ट किया था, आज तो 3 लाख हो गया, अगर मैं ट्रैक ही नहीं कर रहा हूँ तो. बट अगर मैं उसको कंसिस्टेंटली ट्रैक कर रहा हूँ तो हो सकता है मैं वो रिकमेंडेड स्टेप्स लूँ और मैं अपना परफॉर्मेंस इंप्रूव करूँ.
An ultimate best way of killing the anxiety for the retail investor is you do a simple index ETF or an index fund. मतलब आपको आप फंड मैनेजर का भी टेंशन मत लो, खुद के ट्रेडिंग का भी टेंशन मत लो. इफ यू आर दैट एंशियस that you are not confident and you need to keep switching here and there every 3 months or 6 months, and you're not able to take that judgment, then I think the best solution is indexing. I think that is the best possible solution for a retail investor, because there you are going in line with the market. You're just playing the India story, and without worrying, without having to shift here and there, you will make sure that you still do very very well as a retail investor.
एंड एंग्जाइटी पे एक और पॉइंट है कि एंग्जाइटी सबसे ज़्यादा होती है एक दिन रिजल्ट के पहले. रिजल्ट आने का आपको पता चल जाता है, यू एक्सेप्ट द रियलिटी. तो इसमें भी ऐसा ही है कि आपको पता नहीं है तो आपको एंग्शियस हो, बट पता चलने के बाद यू कैन टेक द एक्शन.
Talking about the retail investors and checking how their performance and their investment eventually to beat the index. Can you just, I just want to know what is the percentage of retail investors today in India, and in the developed countries, how good are the retail investors continuously, involved in the market? So if internationally the retail investors are already very high, then probably the sense of Indian investors also growing would be comparable, or it would make sense that way.
So participation in the developed world is obviously a lot higher. I mean, US is at 50%, the UK is at 50%, China is at 15-20%, we are at maybe 4-5%. But the participation problem, as far as penetration is concerned, India, there is a large opportunity. But the question of performance and underperformance is still rampant in the developed world as well as in India. I just showed a slide where even Indian investors, where even global investors globally have underperformed by 4%. The average retail investor is making only 1.6%, whereas the S&P 500 was making 5.6%. So, just a minute. I'll just show you that slide. So that problem is not just an Indian problem, but it is a global problem of sorts. Just one second. Yeah, this is the US markets, where if you see the average investor makes 1.9%, where the S&P 500 is at 5.6%. Even something like a 60-40 equity bond portfolio has done 5.2%. So while penetration wise global developed markets will be better off, but underperformance problem is as rampant as it is there as is probably in India, probably more so in India, because in India nobody even tracks it. Great. I think we'll take one final question, and then if there are any other questions, we'll take break for lunch.
So Abhishek here from Business Standard.
Yeah, Abhishek.
So in mutual funds, when we invest, so there are different index for different mutual funds. So if I'm investing in a large cap fund, there's Nifty 50. And if I'm investing in an IT fund, so there's an IT index. But if I'm doing the same thing in a demat account, so I have a general investments in different companies, and then I'm positive maybe on agriculture or something, and I invest in those sectors with the perception that they would do well in the later period. But that won't make sense if the total investment is compared with one single index. So do you plan to create different pockets of portfolios so that would make comparison more relevant?
So what we've done is, as you rightly said, right, comparing the entire portfolio with one benchmark, maybe like a Nifty 50, is not accurate. So we have actually analyzed the trading and investing patterns of our customers, and basis their holdings, basis their trading style, we are recommending which is the optimum benchmark for them to track. So just to give you an example, if there's a person who's mainly trading in small caps, we recommend that it's better that you track your performance and benchmark against a Nifty small cap 100 free index.
These are the recommended indices. So Nifty 50 is one. Nifty Next 50, if you are trading pretty much everything, you can compare yourself to Nifty 500 or the Nifty Mid Cap 100 or the Small Cap 100 if you are just a small cap investor. And if you are a leveraged investor, then you should look at the Nifty price return 2x leveraged index. So we are not saying Nifty 50 is the only benchmark to track. You could choose from one of these 6 or 7 depending on. Now, if in your example, if you're an agricultural investor pretty much, and sometimes you're doing that, sometimes you're doing large caps, mix of all, then probably the recommended index for you will be Nifty 500 and not the Nifty 50. Yeah. So that is obviously taken into consideration.
And while we do the onboarding, we'll recommend it to you. So basically, we'll be guiding you also that you should be tracking your performance against this, not basis. But as Yesha also showed, there is an option to compare against multiple indexes also. So yeah. So it's not like only one. We can do it multiple also. You can keep tracking against multiple indexes.
And we also track the traders trading
You
patterns.
can track
So if you are-
against anything you want. Mid cap, bank nifty, auto, ye wo jo karna hai. Whatever you like.
We'll also recommend you, we'll say, let's say if you are an option trader, we'll say you track with Nifty 2x leverage. If you are a buy and hold investor, we'll say Nifty 500 is for you. And if you're a regular trader, Nifty 50 is for you. So we also segregate the clients as well. We tell them that, okay, you are not a, people actually mistake themselves that they are investors, but many are actually traders in the garb of investors. They do a daily trading, but they say, now I'm an investor. So we recommend them that, no, you're not an investor, you are a trader. Please match yourself with a Nifty 50 and not a Nifty 500. So that also we have incorporated in the app.
Great. Thank you.
Thank you. Thank you, Jimit. Thank you, Pratik.
We'll
Thank
be
you.
available if you have any questions.
Thank you, Isha. And thank you all of you so much. I hope all of us, for what we were here today, it has been delivered very much successfully. And as my mentor always says, that we have not come so far just to be this far. So see you guys soon. Thank you. Thank you so much. The lunch is served outside. Kindly help yourself.